All right. Good morning, traders. How are y'all doing today? It is Saturday, February 21st, and we're going to do our live session. Where I'm going to cover what I am interested in trading potentially into next week. So I have been out for a couple of weeks as far as YouTube is concerned. I went first to New York City to visit my daughter, hang out there in the snow. I currently live in Florida, so that's a little different for me, but I did enjoy my time there. And then after that, I took my mom and dad on a cruise and we got to snorkel in Honduras and it was a lot of fun. So, anyway, I've been gone, been a little absent from YouTube for the last couple of weeks, and that is why. I think as traders, we can get sucked into looking at charts all day, every day. And it's a pretty stressful career or hobby, however you treat this. And so, time away from the charts is very important. I encourage all of you to get the opportunity to get away from the charts and give your brain, your emotions, your everything just time to reset. All right, so let's get started. I like to start out looking at SPX, the cash S&P 500, from a top-down approach, starting with a weekly chart here. The reason why I day trade a lot every day that the market's open, and looking at 5-minute charts all day every day, if I never took a look at these higher time frame charts, I wouldn't have a bigger picture perspective. So I encourage you to look at weekly charts and daily charts and 4 hour, even 2 hour if you get stuck on 1 or 3 or 5 minute charts, just to give yourself a bigger picture perspective. So looking at the SPX weekly chart, this is last week's candle. It was basically just a candle that came right back up to where the previous week, give me 1 second. Sorry about that. Where the previous week had opened, basically that's where we closed last week. So we just engulfed the body of last week's down candle. This week we engulfed the body. This support zone here is just using basic Fibonacci, measuring this rally move, not from the low here because that was part of that move. This is a new move, right? And it was an up move from Thanksgiving up to the most recent all-time high a few weeks ago. That's a move that I measured there to get this support zone, the 50 and the 618. And you can see it worked almost perfectly. The low this week came down, touched that 618, and we definitely got a very nice bounce from there. I also have my favorite candlestick structure, the inside candles. In this case, it created a demand zone because the next candle was an up candle. So not only do I have Fibonacci support here, I also have candlestick structure support here, where I was confident that we would see buyers step in, and that's what happened. Now this support zone, this demand zone has been tested multiple times, and the more a zone is tested, the higher probability on the next test it could break. I just want you to be aware of that if you're trading off of these zones with me. Now, where we closed on Friday is right at an area of resistance or supply. It was an area that all of these candles here closed inside the body of this initial candle, or this mother candle that we call it. And then last week we created a down candle, a down right into support, but nonetheless a down candle. So this created an area of supply, and that is where we popped into yesterday, and then we just stalled there. So if you notice, these zones are very close together. When we have zones that are very close together, I expect choppy conditions. And really, honestly, since December 1st to now, we've been in choppy conditions, guys. We have been trading basically between 6,800 and 7,000 for quite some time. All right. All right, let's look at the daily chart on the SPX and see what the daily chart looks like. Again, you will notice the choppy conditions. We come down, we bounce, down, we bounce, down, we bounce, down, we bounce, down, and we're bouncing. All right, chop, 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 chop. As far as my supply and demand, or buy and sell zones go, that's going to be 69.57.5 by the all-time high of 7002. And that is the sell zone going into next week for me. If price gets up into 69.57.5, that's where I would be looking to potentially go short for a swing trade. And I know if you might not trade SPX, not everybody likes to trade SPX, and that's okay. Even if you trade SPY or your favorite names, you need to be aware when the S&P 500 is in a sell zone or a supply zone if you have long positions in the market, because I would always consider taking some profits if the overall market is in a sell zone. All right, so my sell zone for next week is going to be 69.57 to 7002. My buy zone for next week is going to be down here at 67.92.93 to 67.20. All right, that's my major buy and sell zones. Now on this daily chart, we spent 1, 2, 3, 4, and 5 days below the daily EMA cloud. All right, yesterday we closed above this cloud. That means that now this 68.96, let's just say 6,900, that's a big psychological value. That is so important going into next week. Bulls want to hold price above this daily EMA cloud, and bears want to get price back below it. So it's going to be, I suspect, a tug of war between 6,900 and 68.85. That 15 points could be a tug of war area, and I have no idea. I'm not I just don't have a crystal ball that tells me who's going to win, but I want you to be aware of those values here on SPX, 6,900 to 68.85. That 15 points, bulls and bears are in a fight over, and whichever one wins is going to lead me into my bias going into next week. So when we open up Monday or Tuesday or Wednesday, if we're above 6,900, then my bias will be to the upside, targeting this sell zone. If we are below 68.85, then my bias will be to the downside, targeting this buy zone. All right? Awesome. All right, let's take a look at the 4-hour chart. I can tell you not a lot's going to change as far as my buy and sell zones go. You have some immediate support right here at about 68.43 by the bottom of this inside and up, which is going to be about 68, 31, 32, right in here. This is some what I would use as intraday support. I am not making this zone green and treating it as a major buy zone this week, but it would be an intraday support level. Now, if you're a member at Simpler Trading and in the Trendy Trading Room or the SPX Trading Room, you know that this orange edge right here that you see, that is a lower daily edge, and that is an intraday buy zone anyway. So I wouldn't have to manually put this zone on my chart. If I have the trendy indicators and the trendy edges, I know that this is a buy zone, and vice versa, I know that this is a sell zone right where price closed at on Friday. All right, so that's what the 4-hour chart looks like. To recap, I am expecting pretty choppy conditions for until either we take out the all-time high or we break below 67.72. I will remain in more of a day trading focused mindset. The reason is because with choppy conditions, I prefer to have most of my focus in day trades, unless of course a name that I've been watching for a long-term trade pulls back into a buy zone. Then I would consider starting a long-term trade on that name. My issue is that none of those names have pulled back in the recent weakness in the market. They have not pulled back to those higher time frame buy zones, so I haven't started a lot of long-term type swing trades. I am very, very patient, and I encourage you to be very patient and wait for your levels as well, because the market rewards patience, guys. All right, so my focus remains mainly on day trading unless, again, we make a new all-time high or bears can finally push this price below this 618 here, and we actually close below there. So with a day trading mindset, in the meantime, if I am to swing trade, it's going to be swing trades that I'm going to be in for a few days, maybe the whole week, but more than likely a few days, because choppy conditions. Remember, I buy calls and I buy puts. All right, I buy calls and I buy puts. I am a directional trader. I do not trade spreads. What happens in option premium when the market is in choppy conditions is that as the week goes on, when you're not getting follow through, continuation to the upside or the downside, what happens is the theta decays in that option premium, and the price, even though the actual equity price is holding steady, the value of the option decreases as that theta decreases. So for me, in choppy conditions, it is more wise to focus on day trading or short term swing trades, as in take a trade for a couple of days, right? So just know, if you're in the rooms, you're following my alerts, that is my focus, okay? All right, as far as where I am looking for strength overall, so Rom asks, otherwise you're looking for swings to the short side. The answer to that question, Rom, is no. And very simply put, the reason I say no is because I am a trend trader. I trade the trend. And when I'm talking about swing trades that I could potentially be in for a month or two, I go with the overall trend of the market. So if you look, Rom, at this weekly chart and the candlestick structure, there is nothing here that says we're in a bearish trend, right? So my swing trades that I would be in for a month or two are not going to be short-term trades or short-term. They're not, shorts are not going to be my focus for swing trades, all right, unless we get into a bearish trending market. So even on a shorter look back, as in shorter, as in from this November to the recent all-time high, that's a pretty short range to look back on. We're still in a bullish trend. We're in a bullish trend according to the way I consider a bullish trend, unless 67.72 is broken and bears continue pushing price down into these lower levels. Okay, does that make sense? I hope that makes sense. Because I'm a trend trader, this market is in a bullish trend from a weekly look back. From November to the all-time high, we're still in a bullish trend. My swing trades will remain looking for bullish setups in the relatively strong areas of the market. So let's talk about that. How do I determine where the strength of the market is? I've showed this several times on YouTube here. I use a website called koifin.com. I learned this from Ragi. She's a trader at Simpler Trading. Whenever I was a student in her class, and it's just ever since, it's the way that I look for relative strength in the market. And so I go out to koifin.com, I choose the US sectors, and then I add the ones that I track into this chart. And then I'm going to look at where the relative strength is on a monthly, a quarterly, a yearly look back. All right, so once I get those added in there, you can see right now we're looking at a yearly, so looking back 365 days, and the relatively strong areas of the market will be at the top here, and the weaker areas of the market will be at the bottom. So looking back over the last year, you can see that gold and metals and mining, semiconductors, oil services, industrials, and energy are leading the pack as far as strength goes. Then I go to a 3-month look back. So over the last 90 days, what has been leading as far as strength or bullishness over the last 90 days? And that's going to be gold miners again, and gold. That's going to be oil services again. That's going to be metals and mining. That's going to be semiconductors. And here's one that it wasn't in the yearly look back, but was in the 3-month look back, and that's materials. So materials jumped up ahead of some of these at the bottom here, but let's see how they were really, really close to energy. On the yearly look back, it's just showing that you have some strength there, and they surpassed energy on a 3-month or the last 90-day look back. Then I look back over the last month and look at the last month. You can see that gold miners and metals and mining are no longer on here looking back over the last 30 days. But oil services is here. Oil and gas exploration is here. Energy is here. Guys, that means oil right here is strong, relatively strong over the last 30 days. Then materials again. industrials again, and utilities is coming on up. So here is the strength in the market over the last 30 days. And then I'll even take it down to the last 5 days. Gold miners comes back in the mix. Then you have oil exploration, oil services, industrials, utilities, and semiconductors. And you can see, you get kind of an idea of the same areas of the market showing strength over all of these lookbacks. Once I have done that and I've written down the stronger areas of the market in each one of those lookbacks, I look for the ones that are on multiple lists showing strength. And then once I have done that, for instance, you heard oil services many times, right? That is OIH. I go to this flex grid where I have the names that make up OIH in their, this is a higher percentage of the OIH sector is Schlumberger than all the way down here to LBRT. So I look at the names in this sector. I write down ones that, number one, I can afford to trade in my smaller account. I look for ones that are showing relative strength. I look for ones that are close to what would be a potential buy zone. And I look for the names that have liquidity. So they're going to be easier for me to get into and out of. All right. Once I do that, I put them on my list over here, the names that I have chosen from those relatively strong areas of the market. After I have done that, I get a list, and let me point out, I do not typically trade earnings. So if something is showing that it has earnings soon, I want it to at least be like 3 or 4 weeks from now. So Alcoa is on my list. It shows the earnings symbol right here, this blue circle, but the earnings are in April, so I have plenty of time to trade that before earnings, so I'll leave it on my list. WPM down here, they have earnings on March the 12th. That means if I'm going to trade them, I need an entry probably this week, and I would be out of it before their actual earnings date. All right, I think I got all of that done, or all of that explained, and hopefully y'all understand. If you have any questions about that part of my process, you let me know. In the meantime, I'm going to go and look at my list starting with Alcoa and talk about where I would potentially be a buyer or a seller on Alcoa. Now, this market is still in a bullish trend according to how I look at it. But, Alcoa is in a leading strength area of the market, and it's a relative outperformer in its sector. And that means I am not looking to swing trade Alcoa to the downside. I'm just not. Now, don't get me wrong. I will trade to the downside, and I do just virtually every single day. But when the overall trend is bullish, I'm going to choose to day trade to the downside, not swing trade. I'm not carrying them overnight unless, of course, price were to pop up into a sell zone, and it would be a trade I'd be in for a few days. Okay, and then I would choose the overall market, SPX or XSP, to buy puts in, not an individual name typically. All right, so Alcoa, going to the weekly chart, I can see here the bottom of this choppy range for Alcoa is going to be around $55, $56. If I look at the daily time frame for Alcoa, I can see that I have a buy zone based on a trendy edge, and then using the 38.2 and the bottom of where this bottom of this chop is at, that would give me a buy zone on Alcoa of about $1.75. So $1.75 would be my risk. Now, I would look to go long at inside of this buy zone, and a stop would be a daily candle close below $54. All right. If I get a daily candle that closes below $54, I just exit the position. I can admit when I'm wrong on a trade, and it's very important as traders that you get really good at admitting when you're wrong in a trade, and don't hold on to a losing trade that has broken your plan because you don't want to admit you're wrong. I'm telling you from personal experience, I have lost more money doing that than I have for any other reason in trading the stock market. Okay, and definitely don't double down when your plan is not working and you're really struggling, grasping at straws on hopium. All right, if it wasn't part of your plan to add to your position and you've hit your stop, please take it from me, learn from my mistakes. Don't double down there. Just admit you're wrong, take your loss, and look for the next setup. So my setup on Alcoa would be a buy at or near $55.75 to $54. A stop would be a candle close below $54. I'm looking to trim this position at 60.5, and I'm targeting $64.15 to $67. All right. At my first target, I like to come in and set a break-even stop. I'll just put an alert back where I got in, and once I've taken profits at my first target, I don't want to give back any of those profits. So if price pulls back and it hits where I got in at, I would take the remainder part of the position off and just look for another setup. All right, so that would be my trade plan for Alcoa. Now let's look at AU. This is a gold miners type of name here. It has relative strength. It has a lot of reasons why I like it. Now, I'm not a buyer on momentum. I like to buy pullbacks to demand, and the demand zone for AU is going to be 107.27 by 103.18. My first target is going to be up here at 112 to 113, and then 115.81, which is the all-time high. And I put an extension target here in case we break or make a new all-time high. My next target would be about 121. All right, so my buy would be here at 107.27 to 103.18. That's going to give you about $4 of risk. You got about $5 to $6 reward to that first target, and then you got about $8.50 to the second target, and obviously that extension target would be a nice home run type of trade. But I'll take the base hit first and then protect my capital and ride the trend up to my home run. But protecting my capital means pulling my stop up as we make higher highs. All right? All right. Hey, do me a favor if you haven't already, hit the like button. I would surely appreciate it. It helps me out with YouTube algorithm. It takes about 2 seconds to go over. Hit that thumbs up. You see it, the thumbs up button there on the screen. I would surely appreciate it. All right, let's look at Baker Hughes. Baker Hughes is another outperforming area of the market. It is a strong name. Again, I would wait for a pullback to this demand zone or this buy zone. It's going to come in at 60.09 to 58.43. Now you do have the lower weekly trendy edge at 59.39. What I would do is start a position up here and then look to add to the position down at the weekly edge to the bottom of this zone. My stop would be a daily candle close below 58.43. My first target would be right up here at 62.31. And then ultimately I'm targeting this supply zone at 64.17 to 68.59. Hey, if you are curious of how we find supply and demand zones and where bigger money is waiting with their orders, Trendy John and I are doing a supply and demand 2026 evolution class at the end of March. There'll be more details that come out soon. We're going to do a webinar in the middle of March, but I'm really excited about that because we got a lot of evolving things to teach about supply and demand and trendy trading. All right, let's look at CDE. Again, you're going to see a lot of names related to gold or metals, mining, materials, that sort of thing, because those areas of the market are showing relative strength. All right, CDE is another mining name. The buy zone for me is 2265 to 2058. The first target is 2457. Then I'm targeting 2630 by 2777 there. A stop would be a candle close below 2058. I do have another buy zone right below there, but I'm not looking to be in this trade for $5 of risk when only reward is $2. I would rather a $2 risk for a $2, a 1-for-1 at that first target. All right, but that's just me. You, of course, have your way of trading. This is mine, and I would prefer to use this zone here, $2 of risk, and then reward up here. All right, XLU is coming on as far as strength goes. My favorite names to trade in the utilities sector is Duke and NEE. So both of those names are on my watch list to potentially trade this week. Duke here, it's right at resistance. I, again, am not going to go long at 127. I'm going to wait for a pullback to this golden profit area in here at 124.73 by 122.92. This is where I would like to go long from, by the dip here, and set my stop as a daily candle close below 122.92. Basically, if this flush low gets taken out, I want to exit the position. All right, and as far as targets go, it's going to be 127.37, then 128.53, and finally 130.03. Those would be my targets to the upside on Duke. So that's going to give me a risk of a little less than $2, a reward, first reward of about 2.5, and then it just increases from there. So that meets my risk to reward parameters, and it's a risk that I am comfortable with. Freeport, just to be transparent, I do own equity on this name. I bought it on a dip last year, much lower than where it is right now. And so just for transparency purposes, I want you to know that. Now, Freeport has been building liquidity down here at 61.74 to 57.70. That would be the area I would look to buy a dip at. You do have a lower trendy edge right down here near $60. It's a double stack of edges. So I would look to start the position here, add to the position down here. My stop would be a daily candle close below 57.77, and I am targeting initially 67.30, 69.63, and then if we need further targets to the upside, I will do that if we take out these two targets. All right, so that would be my game plan for Freeport. Then GDX, if I don't want to trade like individual gold mining names, I can always trade the sector GDX, and I like to have that sector on my watch list when it is a relative outperformer to know where that buy zone is at. So let's say that GDX pulls back into my buy zone and I go long GDX. That means I'm not going to take these other gold mining names even if they pull back into buy zones, because I would already be long the sector itself. The buy zone for the gold mining sector is 101.82 to 97.41. I got a double stack of edges down here towards the bottom. That means if we get a pullback to 101.82, this would just be a starter area for me to start a position at and leave allocation to buy this double stack of trendy edges if price were to continue to show weakness in this demand zone. All right, as far as targets go, it's going to be up here near 108 to 110, and then the all-time high 113 and a half. All right, that would be my game plan for gold mining sector GDX. Now let's look at GE. Here's a name in the industrials. I showed you on that look back, or that look using COIFIN, that the industrials are showing relative strength. They are in the top in a couple of different time frame look backs. So GE is definitely an outperformer. I mean, it's right up here near all-time highs. I do not go long at all-time highs. I wait for a pullback. Now, this pullback is about $26 below where price closed. That is it would take a dip, right? But I would remain patient. I'm not looking to go long before this unless I just wanted to day trade GE. If I just wanted to day trade GE, then I would look at smaller time frames such as a 2-hour chart. I would use the exact same process, looking for the inside and up candlestick structure to create my buy zone. And for this, wow, that's really wide, but you have an inside and up here and an inside and up there. So my buy would come in here. I would use the PMZ or the pre-market zone indicator, my favorite day trading indicator, and then take a trade on GE for a day trade. But if we happen to get this pullback to the daily buy zone, I would like to be a buyer here. My stop would be at 310.22. As far as targets go, my first target on GE would be 327.84. The reason is that's an upper monthly edge. You can see it was an area that was resistance before we got above it over the last couple of trading days. But so that would be my first target from this zone. That's about $10. So I'd have about $7 of risk, $10 for the first reward. And then my next target would be up here at 341 to the all-time high. All right, so that would be my plan for GE. Now let's talk about gold. Gold, unfortunately, the price to trade it has just gotten to be a little outside of my budget as far as risk and how many contracts I can buy. I like to be able to buy at least 2 contracts, and I have an allocation of $1,000 at risk per trade. So I really need the contracts to be $500 or less, and gold, just with the volatility, has been higher than that. So I haven't really been able to swing trade gold. Another option, of course, is always to day trade gold. Someone asked about a potential, buying puts. I'm going to tell you, if you're interested in buying puts on gold, you see this bearish golden profit area here at 466 to 476, basically. That area has been the area to short gold. Ever since it had that big 3-day drop where it dropped, I forget how many, what percentage, but it was pretty major percentage here. It dropped, 17% in those 3 days. That's pretty big. Ever since it did that, this bearish GP has been the area to short gold. So if you are interested in shorting gold, that's the area I would do it from. But notice you had this opportunity and it worked. Now you're getting another opportunity. I'll just point that out. If bulls get priced though above 476 and a half, then I'd be targeting 489 and 499, an all-time high. But this would be the area to go short gold. So if I know that gold's in resistance in an area that I would, if I was looking for a short, would short it, do you think I want to go long anything related to gold where price is at right now? And that's a serious question. You can answer me in the chat. Would I want to go long where price is at right now if I can look at gold and see that it is at an area I'm expecting resistance? That would not be a good idea, right? So that's why I'm waiting for pullbacks, right? That is exactly right. So pullback for gold for me would be down here near 436 to 417. You do have a little lower weekly edge down here for a trade that you would like to be in for a few days, right? You can look at 448 as a buy zone there, and then I would target that bearish GP if I wanted to be in it for a few days. I think for now what I'm going to have to do with gold is to day trade it, just because of the cost of the options right now. So for those of you in the trendy room, let me put up a day trading zone that I would like to day trade off of, just to give you an idea of where I would be looking to go long or short from. And if you want to day trade gold with me, if you see an alert come across for GLD calls or puts, you'll know that that is more of a day trade focus for me. Let me just run this out to March 1st since it's a day trading chart. Okay, when I'm looking to day trade, I am always open to both sides, calls or puts, because they're day trades, right? Not swing trading it, don't have to worry about that. So my buy zones, my sell zones, that's my sell zone up there on gold. I'm going to go to this 4-hour chart and see if I've got candlestick structure to create the buy zone. You see it right here, inside and up, and I'm going to use this wick low as my major buy zone for this week to potentially a day trade off of. Okay, Then also intraday, there could be intraday zones using a smaller time frame, candlestick structure, or Fibonacci's that I could day trade off of as well. And if you're in the trendy room, I will share that chart with you if I end up taking a day trade on gold. But I'm convinced that's how I'm going to have to trade gold for now because of the price of the weekly or monthly options. All right, so there's my major zones for this week for gold, and I plan to do some day trading of gold next week. Lori says gold is in a squeeze. It is, Lori, and I have the new Squeeze Ultra indicator here that John Carter, the owner of Simpler Trading, he recently upgraded the squeeze indicator with the Squeeze Ultra. Now gold is not in a daily ideal squeeze. Maybe the 4-hour ideal squeeze has fired off one bar here, but you can see on this Ultra squeeze, you want to get in on the white arrows. It would have given you an entry on this 4-hour chart on GLD right here, right? And then boom, 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 and now that 4-hour squeeze has fired one bar. We're looking for anywhere from 6 to 10, usually about 8 bars of upside, since it fired to the upside. But yes, Lori, GLD was in a squeeze on the 4-hour, it's fired one bar, and the daily, it's still in that squeeze. Maybe even weekly. Nope, no weekly squeeze. All right, let's move on down to Halliburton here. Halliburton is a name, FYI. I don't know if anyone is still in that trade with me since we got into it last year. But I can tell you we've gotten a couple of trims, and the next one's at $37. All right, but let's look at Halliburton though from just a swing trade perspective rather than a leap or a long-term equity type of trade. My buy zone for Halliburton is here at 32.79 to 31.44. I do have an alert at the lower weekly edge because you can see that's kind of the top of the bottom of chop range on Halliburton. So I want to be alerted there. I could start a position to the upside for Halliburton there, or just be patient and wait for price to continue pulling back. I'll watch price action there. I'll use my confirmation process. And if you're in the rooms, you should know what that confirmation process is. But this is my ultimate buy zone. This would be my stop. A daily candle close below 31.44. And I'm targeting 35.53, then that 37 and 39 dollars for Halliburton. All right, and Lori, Halliburton's in a squeeze as well, right? Which buy zone is $10 for GLD? Rom, is that the buy zone? It's more than 10. It's 19, right? Oh, probably the day trading. Yeah, so Rom, remember, right, for me, I wait for confirmation in a buy zone on day trades, and my stop is a lower low in this buy zone. So there's no way my stop would be a $10 stop. Now, if I was swing trading, it would be a $10 stop. But is that a big deal when gold has a daily ATR of 14? It's not a big deal for me. Okay, I like my zone to buy in to be anywhere from 1 to 2 ATR of the name I'm trading, and that falls into that. But if a zone is too wide for your risk tolerance, I would suggest either scaling in to the zone, or cutting the zone in half, making it more towards your risk tolerance. All right. All right, let's look at Honeywell. Honeywell's another name outperforming in an outperforming sector. It is right up near all-time high, meaning I am not looking to go long where price is at. I'm waiting for a pullback. If the pullback doesn't come, that's okay. Okay? So my buy zone for Honeywell is 230, let's just say 235 to 230.91. That would be where I would be looking to go long. I'm looking to trim up near 244.16. Above there, if we indeed hit 244.16, a cool way to find extension targets is to take the current uptrend here, use some Fibonacci extensions. And well, 250, that's a psychological number, so I'm going to set a target there. And then I'm going to use the 618 extension, and then I'm going to use the 100 extension. And that's going to give me some extension targets above that high there. Okay? But that's how I would trade Honeywell on a pullback target. All right? Let's look at Altria. Look, when the market wants to be going down, people are still buying things like toilet paper and cigarettes. All right? So I put this name on my list. Now, I would be waiting for a pullback down to 64.19 to 62.82. On the way back up, I would trim at 66.44 and $68. Ultimately targeting this sell zone or the supply zone up here near 70 by 75. All right, so that would be my ultimate target, but I got a couple of stops along the way to collect some profits and protect my capital. All right, that is Altria. Let's look at NEE, NextEra Energy, one of my favorite names to trade. I am also an equity holder of this name in my personal long-term account for transparency purposes. My buy zone for NEE is down here at 89.73 to 87.76. I'm targeting 93 and the all-time high of 95.5. All right, a stop would be a candle close below 87.76 on NEE. Newmont Mining, a gold miner here. Again, if I'm in a GDX trade, I would not also be in NEM because I don't want to over allocate myself. But my buy zone for NEM is going to be here at 119.14 by 116.24. A stop would be a daily candle close below this monthly edge mid. I'm targeting 126.31, 130.77, and 134.88. That would be my game plan for NEM. Philip Morris. Now, if I'm in long Altria, I would not also be long Philip Morris, and vice versa. If I'm a long Philip Morris, I would not also be long Altria. My buy zone for Philip Morris is 178.78 by 174.67, and then I'm going to target up here near 187 to 191. All right, a stop would be a daily candle close below my buy zone of 174.67. So that's going to give me a risk just over $4, about $4.11. My reward is going to be somewhere around $7 or $8. So good risk to reward. That would be my trade I did. Now, all of these swing trades from daily buy zones, I'm going out at least until the March expiration. All right, March monthly expiration, which is March 20th expiration here. Let's look at Royal Gold. Again, another gold name. Buy zone, okay? feel like I'm beating a dead horse here. Buy zone is 253 to 247.27. Trimming, and trimming on the way up. Royal Gold could also set up for a shorter term swing trade for a few days. If I were looking to swing trade that, my buy zone would be at 270. And then I'm looking to take profits at 285, 296, and 306. Shorter term, tighter stop because if we break below this pivot low right here, then I believe we're coming down to at least 261.10, which is a monthly edge mid, and if not, coming back down to this buy zone here at 253. So if I'm trading the lower weekly edge this week on Royal Gold, I need to have a tight stop on it, because if it really starts falling, it can fall a little too far than what I'm willing to have at risk if I'm getting in at 270. All right. RTX, again, another name that I have in my personal long-term account, but I'm not a buyer up here at highs, but I would be a buyer down here. Why? Because it's a demand zone. You had an inside and up, you got a buy signal, you got a lot of reasons, lower weekly edge, all of the above. You got about $3 risk. Oh, look, here's an ideal squeeze. This is a new squeeze indicator, Squeeze Ultra. It's in an ideal squeeze. Now, some people are momentum traders and they'll take this trade up here near highs. I am not. I'm a trend trader and I like to buy the dip. So I'm waiting for this thing to go on sale to 200. It might not, and I might miss the move, but I'm okay with that. All right. I do not have FOMO about it because I have very strict rules for myself that I'm not going long at highs and I'm not going short at lows. Okay. So that's my trade plan for RTX. That is to buy zone at 200 to 197. That's $3 of risk. My initial reward is going to be $5 to $6 right there. If it takes out that high, I can draw some extension targets like this, taking the most recent move into account, looking at between the 236 and the 38.2. There's psychological level, the even number of 210, then 215, and I bet 220. Oh, go figure. And then 220. All right, so those would be some extension targets for RTX. Now let's look at Schlumberger. Good old SLB. Again, another name that has a couple of different ideas. So if you want to trade the bottom of this chop zone right here and this lower weekly edge, you could go long right here at about 49.25, right? And then you're playing it back up to the upper weekly edge at 51.80 by 52.40. Or you can wait for the buy zone down here at 47.10 to 44.29. I again would be playing it back up near $52. Above there, I have a supply zone on the weekly chart at 55 to 61. So on this daily chart, my next target, of course, would be that weekly supply zone at 55 to 61. And I'll go ahead and draw it on here for that Schlumberger chart. So if I take the trade, I will share these charts in the trendy room with you. If you're in the room. If you're not, come and join us in the room. We have a great time. My trading partner, Trendy John, and I teach and trade live in the rooms every trading day. And I absolutely love the community of traders there. All right, that is Schlumberger's idea. Some Semiconductors, right, is showing relative strength on the yearly and 3 month look back. Some outperformers that I like to trade is Taiwan Semis and Texas Instruments. I have both of those on my watch list for this week. I will mention that NVIDIA is reporting earnings and can affect these two stocks with NVIDIA earnings. My buy zone on TSM is 33, 37.5 by 316.14. I'm targeting first 370 and then 380. Those would be my first two targets there on TSM. As far as Texas Instruments go, I have not charted this one recently, so let's chart it together. Looking at a daily chart and considering where I would be interested in buying the dip. See this area of consolidation, and then we gapped up right here. This is going to be the buy zone for me. So I got to look at all this consolidating that took place right here before we gapped up. Now you have a gap, right? So typically if I have a gap that's a part of a zone, I will start the trade at the top of the zone, and then I will add to the trade at the gap fill to the bottom of the zone. All right, and that's what I would do for Texas Instruments here. Okay, now 203, that's about $16 below. Could be a couple of big down days, could get you down into this zone. I know it looks far away, but I got patience and I can wait for the setup to play out. Another option though would be here trading it more just for a shorter term swing trade, like a few days. If you wanted to do that trade, I would use the lower weekly edge by the upper yearly edge, and I would trade this zone right here, which is about $6 of risk, and then the reward is going to be about $9. So it's got the risk to reward that I would be willing to trade, and you got the confluence of the edges right here. So this is be a trade that I would trade for a week to two expiration. This trade though is one that I would choose a month, 2 months to expiration. All right, cool. Let's look at WPM and wrap it up right there. Again, another gold or mining name. If I get in GDX or any of the others, I would not over allocate in these names. Following along to the same idea of every other trade I've set up. If you come back here, WPM, actually this buy zone on WPM was created way back here, and it was tested multiple times, right? You can see it was tested here, and it was tested again here. So this is not a fresh zone. It is a tested zone, but it is where buyers have been stepping in. It lines up with the lower weekly edge, and so also the monthly edge mid. You got the, looks like the daily 21, the daily 50, all in this area. You got a lot of reasons why buyers could indeed step in here again. All right, that gives me a risk though of $12. The initial reward is not that great. The upper edge, that's 9. So the risk to reward isn't really here for WPM for me, but I can reduce the risk by half allocation at the top of this zone and the other half at the bottom of this zone and use these same. So then I would have $14 reward for $7 risk. That's a better risk to reward. So what I like to do in these situations is put my alert at the top of the zone, and then when that alert goes off, to really just watch price there and decide if I'm going to wait and potentially get in towards the middle of the zone, or am I okay with taking some risk, the risk to reward not being perfect here, and taking the name back up to the upside from this higher up on the curve than where my stop is at. All right. All right. So that about wraps it up. Basically, my focus will remain a majority in the day trading market. I have been very focused just on SPX and XSP trading, but next week I plan to add some day trading in gold and maybe some other things. So if you're in the SPX room, you see my charts, you know where I'm getting in and out for day trading. Been doing very well. I have a $500 a day profit goal and been hitting it most days. So still doing really well day trading SPX. If you took my SPX day trading class, you know the process that I use. It works really well, and it's been working well for me for over the last year and a half almost now. That's crazy. But yeah. So join me in the SPX room if you want to see the day trading process for SPX. And also join the trendy room if you want to hang out and trade everything besides SPX and XSP with Trendy John and I look forward to seeing you in the next video. My next video will come out tomorrow evening, so be sure and check that out. And I look forward to seeing all of you in the rooms. There is a link to join us in the trendy room if you're interested. And if you're interested in the SPX room, go to Simpler Trading, look up the SPX Alerts room, and join us in there. I hope y'all have an awesome weekend. Goodbye.